the informed investor. Thanks to Century 21. Smarter, bolder, faster. Go to century21.com.au.
We're very lucky every Monday night. We're joined by the chairman of Century 21, Charles Tarby. Good to talk to you again.
Thank you, Steve. Good to hear you back again.
I know your philosophy is never sell real estate if you can avoid doing so. I was having a discussion today with my sister who lives in regional Western Australia. She owns her own house and she's got an investment property inside her superannuation fund. And she's had a long-term rental with a government department who've been renting it. They're no longer going to take up that rent. She's confident she could get a tenant in there through the local real estate agent, but she's just wondering whether it might all be a bit hard and she might be better off selling it. Would you hang on?
I always like hanging on to property, but there are some times when it's actually good to let go. I don't know whereabouts regional WA, because as you know, WA suffered a significant...
Well, she's in Geraldton, so the economy there is going okay.
Yeah, it's pretty strong. So she'd be safe there. And I think it depends on whether or not she's going to invest it straight away. My daughter's about to do the same thing. And as I said to her, look, Sarah, if you're going to sell, are you going to do something? She said, yep, Dad, we're looking at buying something else that they can step up into. So I don't mind when people sell if they're looking to buy. I always worry about people selling. Unless if you look at the marketplace around the countryside in some parts of Australia, there are going to be some opportunities. And if you were to cash in now and you're able to hang on, although the doomsayers were telling you to sell 2 or 3 or 4 years ago, and if you listened to them, you'd have been in a lot of trouble. But today that marketplace has changed and there are a lot of opportunities looming.
If you've got a self-managed super fund, though, it's not bad to have some real estate in there as a mixture in what you've got in shares and investments and cash.
Yeah, most definitely. It's certainly what I've done. I've mixed the two. I don't know a lot about the stock market, so I've gone reasonably safe. But certainly I put property in there as well, Steve, and I think a lot of people do. Some people make the mistake of putting a holiday home in there without realising that that's
can't use it.
Yeah, that's not quite exactly the way it goes, but it certainly is a good place to put some real estate long-term wise. I think the market's long-term. I think we're back in that cycle again of slow decline. Somebody asked me the other day where I thought prices were going to go because people were talking about the fact that there are people out there saying, 20, 30% drops. I honestly feel that the marketplace went 1 year longer than it should have. The boom should have ended 2 years ago, not a year ago, if that makes sense. And when the Reserve Bank reduced interest rates, it gave it a bit of a spur on. And I think if people want to know where prices are going to come back to and settle, I think they're going to come back to what they were like a year ago. And I think that's really where the adjustment's going to be.
You look at what's happened over the past decade. I think there's some new figures out, isn't there, showing what's happened over 10 years. You're in a good spot, sweet spot if you'd bought 10 years ago.
Absolutely, particularly in Sydney, of course. Melbourne's done well too, but Sydney has been probably the premier place to invest in if you own property there. And how wonderful an opportunity if people are looking at downsizing now, especially if you're looking at downsizing, you're selling in Sydney and you're wanting to downsize up on the Gold Coast or up on the Sunshine Coast. Prices are still relatively good there. And you're getting a massive upside in Sydney, whereas the Brisbane market, during the same time as Sydney, hardly climbed at all. So there are some definitely great opportunities. It depends on where you are in the life cycle, I guess, whether you're retiring or downsizing, or I think it really depends very much on that as to what your upsides are right now, Steve.
And it's not just when we talk about the Sydney real estate market, people, focus on the eastern suburbs and, harbourside mansions. The biggest increase was in southwestern Sydney.
Isn't that fantastic? A lot of the areas when you go out Parramatta Way or you go out Liverpool, Fairfield out to Liverpool, all the way further down, the M7 freeway opened up a whole lot of territory that people just saw as chicken farms or light industrial. I drove past Oran Park on the weekend, which had, I think, about 5,000 acres owned by one particular family, and it's all that racetrack is residential and shopping centres, and it was really a bit out of town not that long ago. So it's quite extraordinary. But the M7 freeway and has opened that area up magnificently. And everywhere I turn now, and I took a bit of a drive over the weekend in parts of southwest Sydney and down to Camden, Picton, I hadn't been to for a while. And wherever you look, left, right, there's new homes everywhere you turn.
Love to have been part owner of the Oran Park racetrack. Parramatta, 107.4% over 10 years. The outer southwest, 103%. Southeastern Melbourne, 102.7. Melbourne's western suburbs, 102.3. I mean, really, it has. And yes, we talked about it being a boom, but it's been in areas that you wouldn't necessarily pick.
No, and you know, you and I've spoken about this. There's a lot of locations and suburbs that people shun away from because they've got a bad reputation, or they don't seem to be that upmarket. But it is extraordinary how many of these areas have become gentrified, and certainly as you talk about that, I was mentioning the chicken farms and so on around southwest Sydney and also northwest Sydney. Nobody really went out there, and now of course the train line's gone through, the freeways have gone through, the shopping centres, the schools go in, and the shopping centres go in seemingly before anything else. And I think that's a reasonably good indication that something's about to happen out there.
What sort of clearance rates did we have last weekend?
Actually increased over the week before, only mildly, but 60.6%. I think Sydney had 400 auctions with 61.3%. Melbourne had 612 properties, but it had a clearance rate slightly higher, 62.3%. But your city, Adelaide, 75% clearance rate.
Wow. So Adelaide's still booming along.
It is, and I was talking to one of our principals there who has a substantial office where they sell a lot of private land and government land. And he was telling me that in some of the new suburbs north of Adelaide, you can build semi-detached. You can build like little townhouses on a block of land. You can build 2 or 3 properties. And he said some of those properties are selling house and land $214,000 positively geared. So
why wouldn't you invest in that?
It's bizarre, and that marketplace has been steady all year. It's been one of those marketplaces that had a good supply line right the way through, Steve, all the way through. And because it had issues with unemployment, with various industries closing down but now reopening and other industries coming in, a lot of people have just forgotten about it. And it's just had that steady movement all the way through. The clearance rates in Adelaide have been very, very strong. While Sydney and Melbourne were declining, Adelaide continued to hold its ground. And this week, it was the best out of every capital city, even pipping Canberra.
Good to hear that about my old hometown. Thank you, Charles Tarbey. I'll talk to you next week.
Thank you, Steve.
Charles Tarbey there, the chairman of Century 21. Chairman of